Hi, and welcome to the Stock Scores Market Minutes for June 12th, 2017. This week, play the rumor is the topic. We'll do the market analysis and then the trade of the week on Potash Corp. All right, play the rumor. What do I mean? Well, stocks will typically move abnormally for one of two reasons. Either there is news out or there is a rumor. Something motivates buyers to push the stock higher quickly. Now, moves motivated by news will often start right at the open with a price gap or a very fast move up in that first hour. The market's very quick at pricing in something that is known, something that is disseminated across a wide number of investors. Now, rumor moves tend to start more slowly. It's a small group of people that hear the rumor, or maybe it's an obscure bit of news that's actually in the public realm but not known by most. And so those tend to start more slowly and then slowly build momentum and volume, increasing more gradually. The market prices in news quicker than rumors, and so as a result, rumor trades have a better profit potential but are also harder to find. You have to still look for abnormal activity, but it's not as obvious. And when you go to look for the reason behind the abnormal activity, there often won't be one that is easily found. Now, the trade of the week this week on Potash Corp is a great example of that. We'll cover off on that at the end of today's video. First, let's do our regular market analysis. And you can see here that we had a upward trend that was broken. This is kind of the steepest of upward trends. If we go back longer term, the upward trend looks more like this. So we're still well above this one, but the short-term upward trend has been broken, which points to perhaps the market seeing some profit taking. The market has moved up quite sharply, particularly the NASDAQ technology stocks, and so they're a little bit overbought and due for a pullback. That doesn't mean that the upward trend is over, but it does look likely to stall in the near term. Now, when we look at that long-term chart, we've got lots of room to come down to the upward trend line before we could break it. So there's no real danger right now of reversing that long-term upward trend. But again, the market is a little overbought and perhaps ready to pull back. Now, there's a couple of upward trend lines. There's this one, and then there's the longer-term one here. But it feels like the market wants to get a little bit of profit taking in the near term. There's no real major sign of breakdown yet, but I do think it's important to be cautious going forward. Now, the area of the market that has really lagged is the Russell 2000, the small cap stocks. You can see that while the S&P has been moving higher, the Russell has been going sideways. Whoops. Sorry. I just hit the wrong button there on my screen. There we go. So what's happening with the Russell is it's trying to break through this resistance. Now, that weakness on Friday may stall it from happening. We may get a pullback back into the pattern, but it is looking like it could now play catch up. If there is some profit taking in those large cap tech stocks, maybe some of that money moves into the stocks that have been ignored, which is the small cap stocks. And I've started to see this. There's starting to be a few more lower price stocks making moves. Let's see if that picks up some momentum. On the Canadian market side, we are really in a situation of falling tops. We are kind of stuck in this trading range right here. It doesn't look particularly bad. We've had 2 weeks of sideways trading, but keep in mind that going into that was some bearish falling top. So if we start to move down through this support zone, I would get a little bit worried that we're going to see further profit taking in the Canadian market. And when you look at the longer term chart, you see some of the issues. Upward trend line recently broken, falling top has been built, and so perhaps we are going to move down and through that upward trend line. Another reason to be cautious here with the Canadian stocks. On the TSX Venture, we're kind of in this drift lower. The long-term trend, if we go back over here, was up, and we've come back into this trading range, and each cycle is getting a falling top. That means the sellers are stronger than the buyers. Not, again, a particularly bearish chart because we're sort of in this slightly downward sloping channel. It could just be a pause in an upward trend. But if we were to come down and penetrate this, then that cycle continues. So with the Canadian market, with the Canadian spec stock market, which is what the TSX Venture is all about, I think generally speaking, you want to avoid it. However, there can be individual names in that market which can still make great moves. So if you see a stock behaving abnormally with a good chart pattern, don't be afraid to trade it. Just don't be too overzealous with this market in general. On the Treasury bond side, you can see that we recently broke through this resistance. We have rising bottoms. Looks to me like we're going to continue higher in the U.S. Treasuries, which means interest rates continue lower, and that could be a little bit of a hazard for the stock market. On the U.S. dollar, we are stuck in a downward sloping channel. I've gone with the daily chart this week just so you can sort of see the detail that's happening. But, we might wind up into here and then fall lower, but it does appear that the U.S. dollar more likely to move down than up near term. Unless this downward trend gets broken, preferably from a rising bottom, I would be somewhat bearish of the U.S. dollar. On the gold side, we had a good little rally this week, but we got stuck at this resistance and it reversed lower. Now, in the grander scheme of things, we've broken the longer term downward trend line, which goes back. And so that's a positive. It just now how long is it going to take for it to get through that price peak right there? We do have rising bottoms building into that. So I think this is a market turning around. I don't think it's for sure going higher yet, but it is building upward momentum. Oil, kind of the opposite. It is getting weaker with time. You can see falling tops, falling bottoms. We're at some fairly important support here. This is the low that held in May. Are we going to bounce off of this, or are we going to break down through it? My feeling in the short term is it bounces a little bit, but I do think that we are in serious jeopardy of breaking that short-term support, which makes the longer-term chart ugly. If it would break it through some support going back many months. So that's something very important to watch for on oil. Now, the VIX had a little spike on Friday. It has little spikes all the time. They tend to fade, but if the market does correct, then this is a great instrument to take advantage of it. Just remember, it is a short-term instrument. It loses value over time if it is not moving in the direction of your trade, and so you have to really treat it as a short-term vehicle. I do think we could see something start to erupt here, but for now, these are just minor little blips, and you shouldn't get too excited about them. Wait until we really start to get a build of volume and an upward trend. That hasn't happened yet. So my ratings then, bullish on both time frames for U.S. stocks, but a bit of caution there. So be careful with the U.S. stock market because it is showing some early signs of correction. Nothing serious yet, but early signs are there. Canadian stocks neutral long term, but they are starting to test a little bit of bearishness as we roll over and potentially break support. Short term, bearish again. If it moves down through that support zone that I drew out for you, I want you to take a much more cautious stance with the Canadian market. On the gold market, I've put neutral for both time frames, but it's on the verge of going bullish. If it can just break through some of those resistance zones and get some volume coming in, we could see a little bit of a run in gold. For now, stay neutral, but watch it closely. Oil, neutral long term, but at real danger of breaking through support, and bearish short term as the trend over the last month is down. Stocks are overbought and prone to a pullback. Friday saw some motivated sellers rather briefly, but the upward trend is still intact. Be cautious in the near term and focus on the alpha stocks. Focus on those trading on their own story, often shown by the abnormal volume that they trade. Gold is slowly working on a break through some resistance zones into some optimism, so watch for that closely. Oil could break lower or break support and head lower. Fear is relatively low now, but that could change quickly. So let's talk about the trade of the week. And this is a stock that made one of my action candles. So if you have taken any of my courses, you know what action candles are. So abnormal price, abnormal volume to start the day. It doesn't show up so much here, but that volume was higher than most starts of the day. And so there was some abnormal action there. And if he went looking for news, there really wasn't anything. I actually looked for the news on the weekend, and it took me about 15 minutes to find out why this thing moved. And the reason is the Russian potash company, I think it's called Uralkali or something like that, they're in talks with Belarus about potash production. I really couldn't figure out what that all meant. I imagine it means maybe some constraint of supply, but all of the potash stocks went up. So this is a case where unless you're really close to the potash business, follow these companies very closely, you wouldn't know about this bit of news. And it was these people at the start who traded on that news out of Russia. And then as the rest of the world figured it out, which took a little while, took over an hour, then the stock started to move. And those are the best trades. This did not make a big gap. There was no gap at all. It just showed a little bit of action, abnormal action to start the day. That's because the people who know the most were buying. And then as the broader market learned about it, that's when it got its real legs. And so this is the exact type of trade I love. because it's a situation where the market prices in news gradually, as opposed to something like earnings news, which is released and the market has overnight to think about it. Everyone really considers what it's worth, and you go from here to here at the open, and then you end up going sideways all day. This one went up as it priced it in, giving ultimately a little better than 10-to-1 RR for anyone who followed A, my action candle, and B, my pullback play setup, which had a great result. So that is the Stock Scores Market Minutes. Hope you like the video. If so, click on that little like button, subscribe to the channel, tell your friends to subscribe, tell your enemies to subscribe. We'll see you next week. Trade well.